This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the program, we'll run through the business news stories you need to know about from the continent and beyond. But first, a quick update as far as the markets are concerned. Kenya's president is in Addis Ababa, Ethiopia this week. His schedule apparently includes the attendance of the formal handover of the operating license to a consortium that Safaricom is part of. The firm shares, of course, have gone up by nearly 20% so far this year. That's roughly a 10 times rise compared to the just over 2% rise in the NSE 20. In South Africa, Naspers shared about 0.4% in today's session. The main indices, however, did rise, driven by 1% plus gains in BHP and Anglo American. Here's what's in the headlines tonight. Kenya's domestic debt rises to a record level of $34 billion. The Mastercard Foundation pledges over $1 billion over 3 years to Africa's COVID-19 response. And a major outage linked to a US-based cloud services provider brings down global social media and news websites. All right, then, our starting point today is Kenya, specifically its debt and the budget that will be covered in detail later on Thursday. But let's start with the debt aspect of it. Kenya's domestic debt load rose to a record level of $34 billion as of end May. That's according to data from the central bank. The data shows that the Treasury bonds issued increased to about $26 billion. The Treasury bills went up to about $7 billion. Overdraft facilities at the central bank fell to roughly $558 million at the end of May, and so compared to $610 million at the end of April this year. About 51.5% of government domestic debt was held by Kenyan commercial banks, another 31% held by pension funds, just over 6.6% was held by insurance companies, 5.43% by state corporations, and 5.9% by other investors. The amount of foreign currency reserves held by the central bank also rose for the first time in 3 weeks to $7.5 billion on the 3rd of June 2021. That's equivalent to roughly 4.59 months of import cover and well above the central bank's statutory requirement of having at least 4 months' worth of import cover in reserves at any point. Now, Kenya aims to raise about $16.5 billion in taxes in the fiscal year starting in July. But the Finance Ministry is being criticised for submitting yet another overly optimistic spending plan. Parliament's Budgetary Office, in fact, is warning that if no comprehensive vaccination plan is implemented in the East African nation, future lockdowns may lead to significantly lower tax collection. Now, even excluding pension services from the equation, this is not the first time in Kenyan history when the country's forecast tax revenues are insufficient to even cover the cost of running public services at all levels of government. The East African nation will be spending over $10 billion just on servicing debt, domestic and foreign, in the fiscal year starting in July. Now, for years, the Finance Ministry has also consistently missed revenue estimates, usually by double digits, from July 2017 to last June. You can see the trend that's building up over there. So given this history, the revenue target in this budget at over $16.5 billion is seen by many analysts as being entirely unrealistic. As a share of GDP, income tax and value-added tax have in fact been consistently falling since 2013, and that's despite efforts to introduce new taxes over the years. So over the last 3 years, these new tax proposals have included a so-called Robin Hood tax that would have taken 0.05% of any transfers over $4,600, even if you're paying that money to pay your taxes. That proposal, however, was rejected. However, last year, legislators did approve 2 other taxes, the enactment of a digital services tax and a minimum tax, which, according to the Finance Ministry, was aimed at perennially loss-making firms. Now, the minimum tax, to be clear, is currently facing a legal challenge, but the DST is still in effect. A few hours ago, I spoke to Nikhil Hira. He's a director specializing in tax matters at Bowman's Law. I started our exploration on the uncertainty in Kenyan tax policy by asking him how they are advising client firms to deal with the minimum tax, depending on the outcome of that court case.
When you look at those orders, the judge did say that if I decide that it's fair to continue with minimum tax, then it's going backwards. So I guess one of the solutions is that if you think you're going to have to pay minimum tax, perhaps you should have just paid it as an installment play safe, and then that arrest penalties and interest. Now, the law is silent on whether you can pay installments or whether you have to pay minimum tax. The point is, I think what they're trying to say is you've got to pay something. Now, to my mind, minimum tax is prohibitive because once you pay it, you don't get it back. And that cannot be a fair and equitable system where you're paying tax in advance, having no profits, but yet you pay the tax and you can't get it back. That just seems blatantly unfair to the taxpayer.
And that also leads me to another interesting argument that we've seen coming out of the Tax Appeals Tribunal not too long ago, the one about using overpayment of corporate income tax to essentially, or rather offsetting future obligations of CIT against overpayments of corporate income tax made in the past. And the argument there was that, look, as far as KRA is concerned, you cannot use them unless they give you permission to do so. And you have to do so within this 5-year window. I mean, it just seems like businesses are being faced with one roadblock after another, after another.
Oh, absolutely, Rama. I personally think the law is quite clear. If we have a self-assessment system and you are self-assessing yourself, then you should be allowed to offset taxes that you've paid in excess in the past against what is due now. And I think the tribunal ruling was pretty much along those lines. The point is that what KRA are insisting on is pay your current tax now and apply within this 5-year timeline, apply for the refund. Now, as we all know, and we saw this with VAT refunds, which thankfully has improved, but we saw how difficult it was for KRA and the Treasury to actually make those refunds.
And ultimately, though, looking at the fiscal position the Treasury has, those refunds are simply not going to come. I mean, if you're raising $15 billion in tax revenue, but your spending obligations are closer to $30 billion, I mean, VAT refunds are not going to be on the priority spending list.
Well, no, they're not. And I guess that's the pain the taxpayers are going to feel.
Indeed. I'd just like to follow up on that with respect to installment tax before getting to the DST. But given that a fair number of companies here do pay their taxes rather on an installment basis, when KRA is having these arguments about being able to offset corporate income tax obligations, where does that leave firms that do pay installment taxes? Because it does seem to suggest that they would have to be very, very careful about assessing what their tax obligations are for this year based on what happened in the prior fiscal year.
Yes, look, you pay your installment taxes on one of two bases. You either take whatever you paid in the prior year and gross it up 10% and then pay that as installments, or if you're pretty certain that the 110% of prior year is going to be higher than the current year, then you use the current year. Now, generally, we say to clients and to taxpayers, if you use the current year and you underestimate by more than 10%, you're subject to penalties and interest. So unless you're completely sure that your current year is going to be significantly lower than your prior year, you should opt for the prior year basis. Now, in a time when the economy is dipping, although we do expect in the rest of the year that it might pick up, but whilst it's dipping, that calculation of comparing current and prior is going to become that much more difficult.
Indeed. So DST, the Digital Services Tax, was introduced on services provided by non-resident firms here in January, applied at a rate of 1.5% on the transaction value. Have you seen any roadblocks in its implementation so far, or any minefields that have come up in that space?
Well, look, the whole concept it started with the concept of a digital marketplace, which came out in 2019. The roadblock, I think, to me is, well, what is the gross transaction value? What really is a digital marketplace? And this year, the finance bill expanded to say, whenever you're doing something on the internet, effectively you're transacting on the internet, that it's in a digital marketplace and you're subject to the digital service tax. But what is the transaction value and who's to pay it? What happens if I'm sitting at home and downloading from an overseas website and pay? Who pays the digital service tax? That non-resident perhaps doesn't have a presence here. So there are still a number of things that need to be ironed out. The regulations do go some way towards dealing with that. But again, we're introducing laws which may or may not be right. But if we don't have what I would call the statement of operating practice on how it all should work in place, then the tax is never going to work. And it's just going to have to be reversed in the future. And you'll recall last year that the Parliamentary Budget Office actually said that our policy is just too short term. We do something in year one, we reverse it in year two. And if you look at that from an investor's point of view, while tax may not be high on his issues to look at when he decides to invest, certainty in tax certainly is high.
Let's head over to North Africa now. It's nearly been a week since the Egyptian government lifted restrictions on the hospitality sector. Since the 6th of May, stores, malls and restaurants had to shut down by 9 p.m. after a third wave of COVID-19 infections. From Cairo, CGTN's Yasser Hakim now examines how businesses in that sector have been dealing with the effects of these restrictions.
Waiters at Al Agha restaurant in Giza are back serving Oriental Lebanese food for their returning guests. It's been a few good days for their business after the government eased the latest COVID-induced restrictions to curb a recent surge in infections.
When the restrictions were lifted, operations increased and more people are now coming. At the same time, we are abiding by the health measures like wearing masks and adhering to social distancing for clients throughout the day.
The owner of the Cairo-based restaurant says he had to take several measures to sustain losses during the partial closure period.
Of course, the revenue has been affected during that period, but we had to resort to the delivery and takeaway services. There is good demand on this service, so we increased the number of delivery personnel. No workers or salaries were affected. It's all the same. We just rescheduled the shifts and working hours.
But for majority of clients who prefer to dine in, they're now able to enjoy eating at their popular outlets once again.
Here at Al Agha, I like to eat their steak and shawarma. It's my favorite dish. I was not happy staying at home and not being able to go to places I like, but I understand the need to enforce the coronavirus health procedures.
The government has since last week lifted restrictions, which were imposed for nearly a month amidst the third wave of the coronavirus. The effects of the partial closure have also affected supplies, as hotel services recorded decreased demand.
The feedback from 34 divisions in the chamber, which represent different traders and distributors, has shown there is a drop, but not like last year, because the consumers have changed their purchasing means. They buy food online during closure. Even without restrictions, many people still prefer to buy online. They are used to it and find it easier for themselves.
Meanwhile, financial support has been delivered to some businesses to survive the brunt of the closure.
The chamber here, the unions and the government worked together to tackle the effects of the crisis in 2020, like providing loans and funds to tourism spots, restaurants and cafes so that they paid their salaries and dues without the need to fire workers or close down. We managed to survive the very difficult crisis in 2020 with a full curfew back then. This month's crisis is considered milder, so business owners and workers have been able to adapt to it based on previous experience.
As the vaccination drive is accelerated amid the gradual decrease in COVID-19 cases, restaurant owners are hopeful there will be no need for another closure to destabilize their businesses. Yasser Hakim for CGTN, Cairo.
All right, then a quick run through some company news now. Let's start in Egypt. The Vodafone Group has signed a modified shareholders agreement over their joint venture, Vodafone Egypt. It includes changes to the Vodafone Egypt dividend policy. The firm will now be paying a one-time dividend of about $639 million to shareholders in its 2021 calendar year. Of this, about $128 million was already paid early in the year in March. The parties have also agreed on a minimum dividend payout ratio of 60% of free cash flow going forward. Kenya's national carrier, Kenya Airways, has picked a UK consultancy firm, Steer Group, to guide it on the most viable turnaround strategy options. According to the KQ chief executive, Alan Kilavuka, the London-based firm took up the assignment in May. It will be retained for 3 months. Crafting a viable turnaround strategy for KQ was one of the conditions for the $2.4 billion loan to the Kenyan government from the IMF back in March. Standard Chartered in Kenya plans to give clients the option of applying for personal loans remotely through its imminent entry into the mobile lending segment. This will be in addition to offering low-value mobile credit through the planned rollout of a loan app. The UK-based lender says it doesn't intend to use a mobile loan app as a route to penetrate the mass market, but rather to decongest its branches of borrowers seeking credit services. And finally, Biogen shares surged after its controversial Alzheimer's therapy was approved by American regulators. The stock went up by over 60% shortly after news of the clearance hit the markets, and that triggered a brief volatility halt. It ended up 38% at $396, the biggest single-day gain since drug officials first said that the treatment appeared to be effective back in November. That's a run through your headlines. You're watching Global Business Africa. Time for a short break. Here's what's coming up. The Mastercard Foundation is pledging over $1 billion to Africa's COVID-19 response plan. And South Africa's first quarter GDP data beats expectations with growth of over 4.5%.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Nairobi. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
Welcome back to the program. The Mastercard Foundation announced a $1.3 billion donation on Tuesday to boost the continent's response to the coronavirus pandemic. Public health experts hail the move as a significant step to get vaccines to some of the world's poorest people. The funding will be distributed over 3 years in partnership with the Africa Centers for Disease Control and Prevention. Among other things, it's intended to help acquire vaccines for more than 50 million of the continent's 1.3 billion people, improve its vaccine manufacturing and delivery system, and to strengthen public health institutions as well. Now, the Foundation's pledge is one of the largest private such donations made in the pandemic fight. It comes amid a growing outcry over the lack of vaccine supply for much poorer countries, a significant number of which are right here in Africa. So let's examine some of the details of this initiative in detail. Dr. John Nkengasong is Director of the Africa Centers for Disease Control and Prevention. He joins me now from Addis Ababa in Ethiopia. Thank you very much for your time this evening, sir. So the foundation is providing $1.3 billion to the Africa CDC. But walk us through how this is being split between vaccinations, vaccine logistics, and vaccine manufacturing.
Thank you for having me on your program. Over 80% of the funding will go towards acquiring vaccines, the distribution of the vaccines, and supporting countries to roll out the vaccination programs. I mean, as we have said at Africa CDC several times, we have a simple formula for our approach where we say vaccines must be accompanied by a vaccination. And if we do that, they save lives and save economies. So a big chunk of the money will go towards supporting vaccine acquisition and the vaccination itself. Then some part of the money will be used for supporting countries in the area of human capital for vaccine development in Africa. And then, of course, to strengthening Africa CDC itself. That is very broadly how the partnership is structured.
At this point in time, do you have any specific vaccine candidates that you're intending to acquire? Because I know we have at least 7 or so that have been approved for emergency use by the WHO, but are there specific ones among those 7 that you know you can get your hands on relatively quickly?
No, absolutely. We have the Africa CDC and the African Vaccine Acquisition Task Team, what we usually call AVAC, have secured up to 220 million doses of the Johnson & Johnson vaccine, with an option of scaling that up to 400 million. So within the context of that contract with Johnson & Johnson, this partnership will buy into that. We'll get the 50 million doses from that. And the deliveries will start from the beginning of August this year. So I think we are very excited with this. This is truly a historic and a game changer in our fight against COVID-19. We truly are appreciative to Mastercard Foundation for this historic initiative.
With regard to logistics, though, because part of the problem with getting vaccines distributed across the continent is that the storage infrastructure is usually quite difficult to actually find and build it out in places where historically health sectors have been grossly underfunded. Is that part of the reason why even just distributing the doses we have is proving to be problematic?
Well, the challenge we have with our situation with vaccination in Africa is twofold. One is timely access to vaccines. We just don't have vaccines arriving on the continent in a predictable manner. I think that is one. Then the second is the preparedness, so to roll out vaccine at scale. We as a continent have never been able to vaccinate up to 200 million adults in 1 year. So this is a whole new game exercise for the continent. But however, the continent has the capacity and capability of vaccinating. Just this year or last year, Ethiopia was able to vaccinate 12 million children with the measles vaccines in the middle of this pandemic. So it means if we have vaccines that arrive in a predictable manner, we can organize ourselves and roll out the vaccines and put them into people's arms.
Okay, with respect to manufacturing, Aspen Pharmacare, of course, is working with Johnson & Johnson to produce that shot in South Africa. Egypt, we understand, plans to start producing the Sinovac shot from around June, later this month, in fact. Under this deal, when we talk about vaccine manufacturing, where's the money going? Is it going to be augmenting those manufacturing efforts, or is it going into entirely different greenfield ventures?
The money is going to be looking at the collective, which means there are certain countries that are already in the vaccine manufacturing exercise, not necessarily COVID vaccines, but other vaccines, like the Pasteur Institute in Senegal that has many years of experience manufacturing the polio vaccines, and other sites in South Africa, Egypt, Tunisia, and Morocco. I think those are countries that already have that capacity. But there are other countries like Rwanda, whose President Kagame has expressly asked for and is supporting the manufacturing of messenger RNA vaccines. So what we are trying to do is bring everybody together so that we look at the entire value chain for vaccine manufacturing. So these resources from the Mastercard Foundation will facilitate our ability to unite countries, have a continental plan that can enable us to work as a network of vaccine manufacturers there.
Okay, one last question for you, sir. So the AU's targets to vaccinate roughly 750 million people by the end of 2022. That's barely 18 months away. And at this point, we have less than 2% of adults across the continent having had their first shot of a COVID-19 vaccine. So theoretically, we need to get at least 1.5 billion doses between now and the end of 2022 into the continent and into the arms of millions of adults. How will that happen, given all the resource and logistics constraints you've pointed to?
So that is very feasible if we do the following things and do that collectively. We have the tools in our hands to make that happen. First of all, the big countries that are sitting on excess doses of vaccines must release those excess vaccines immediately so that we can plan accordingly. I mean, the key in rolling out such a massive program is predictability. If we know when vaccines are coming, what types of vaccines, then we can work together in partnership with others to make sure that we support countries to roll out the vaccine. But we need to have that information in a predictable manner. So we are very encouraged with what The United States government announced this week that they will release 25 million doses of vaccines. We are very encouraged with the announcement that happened 2 weeks ago from the Global Health Summit in Rome by France, Germany, and others, that they will release additional doses of vaccines. That is one. The second thing we must do as a continent is that each country must be ready, what I call shovel ready, to move the vaccines quickly once they arrive. And I think this partnership from the Mastercard Foundation will enable us to create that kind of a support mechanism to facilitate the rollout of vaccines when they do arrive. And we do have an AVAT mechanism, that is the African Vaccine Acquisition Task Team, that has secured up to 220 million doses of vaccines. That's a lot of vaccines out there, which will begin to arrive the countries from the start of August there. So I think we are lagging behind seriously, but with a strong solidarity and cooperation, we have a good chance of fighting back very hard and immunize our people appropriately.
But isn't the weak link in the plan, sir, the fact that for a lot of the Western economies that you've pointed to, they really have no obligation to actually deliver these vaccines essentially on time? After all, they went ahead and bought up enormous amounts of supply. They're still hoarding it. And the supplies that we are getting in these donations are really a drop in the ocean. 350,000 COVID vaccine shots came into Kenya this week, for example. And that's not really predictable. Wouldn't it make sense to prioritize securing supplies, buying them outright instead?
Well, you have to deal with issues of supply. I mean, the challenges that we have is not necessarily financial. I mean, COVAX, for example, has raised a lot of money, but the key challenge and limitation is, where do you get the vaccines? That's why the agreements and contracts that we have with Johnson & Johnson offers a lot of hope and promise, because they are secured. I was in South Africa just 2 weeks ago and was at the Aspen facility to look at these vaccines. I think the partnership with the Mastercard Foundation offers a lot of hope. We continue to believe that this is a moral issue, and those sitting on vaccines should truly be on the right side of history and release those excess doses in a timely manner, so that we can come out of this pandemic together.
Indeed. We'll leave it there for the time being. Dr. John Nkengasong, Director of the Africa Centers for Disease Control and Prevention from Addis Ababa. Merci beaucoup for your time tonight. Now then, South Africa's Health Minister, William Kize, he's opted to take special leave pending the outcome of an investigation. In fact, he was actually at that particular event representing the South African president earlier this afternoon. He's taking leave pending an investigation into his alleged role in the awarding of an $11 million communications contract to a company headed by two of his aides. Mr. Mkhize has communicated this to President Cyril Ramaphosa. Initially, he sought to distance himself from this growing scandal around the contract awarded to Digital Vibes, a company headed by his former personal assistant, Tahira Mather, and former secretary, Nadira Mita. But he has come under increasing political pressure to step down. He told reporters he's written to the ANC Integrity Commission indicating his willingness to appear before it, but a date is yet to be set for him to do so. Now, South Africa's GDP numbers surprised on the upside, and the largest positive contributors to growth in the first quarter of 2021 were in finance, mining and trade. Household spending and changes in inventories also did help to spur growth on the expenditure side. Yes, Angelo Coppola with more.
The agriculture, forestry and fishing industries performed poorly in Q1 compared to Q4 of last year, dragged lower by weaker production figures for field crops and animal products. But the latest data has got some good news too.
It was a surprise on the upside. Most of the forecasts for the quarter-on-quarter seasonally adjusted annualized rate was in the region of 3 or just above 3%. So it came in at over 4.6% to be exact. And it was mostly driven by two sectors, mining on the one hand, and then the finance sector on the other.
The economic growth levels are still down 2.7% on where the country was last year.
If you look back just at the first quarter of last year, real GDP sat at 782 billion rand, and just moving on into the second quarter, where the worst of the restrictions came into play, it dropped all the way down to 652 billion. And that really shows a very disruptive effect that these restrictions have had, not just then, but are starting to still feed through to the economy and now in 2021.
Economists remain concerned about the economy and its prospects.
If you actually compare the size of our economy and the real output at the moment, it is about the same size as 2016. So even in spite of the growth, we still have some way to go. And I think, everybody's expectations is that we will probably only in 3 years' time have an economy that's the same size as 2019.
Prospects for the near to medium term remain volatile and uncertain.
Within the near term, we will still see some strong posts coming into the growth. We do have very favorable terms of trade at the moment. We still are seeing that strong sort of export earnings coming in from the strong commodity price cycle at the moment. But that won't last forever. The commodities cycle will slow down at some point more towards the second half of the year.
While the numbers are looking up, there's still an economy that's under stress and will remain under stress for some time to come. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
Tunisia has rolled out a COVID-19 vaccination campaign focusing on tourism professionals across the country. The inoculation campaign is aimed at jump-starting the tourism sector, which has been absolutely battered by this pandemic. From Tunis, here's CGTN's Adnan Chouachi.
The Minister of Tourism and Handicrafts declared that the campaign will last several weeks. All vaccinated professionals will be allowed to resume work at hotels and tourism facilities which have reopened in the country.
Our objective is to protect the tourism sector staff as well as Tunisian and foreign tourists visiting the country. The tourism industry is the most affected sector since the outbreak of the pandemic. It's been completely shut down and paralyzed for more than a year now. Some 400,000 families are without financial resources after losing the only source of revenue, which is tourism.
Health and tourism authorities aim to show Tunisia as a COVID-19 safe destination. The vaccination drive is seen as vital to enable the government to restart the tourism industry, which is a major economic engine for the North African state.
This is a positive message to the whole world and is an open invitation to visit Tunisia. All tourism employees will be vaccinated and ready to welcome tourists in safe hotels.
I hope that all the people will get vaccinated. As tourism professionals, we are in direct contact with international travelers. The vaccine will protect us from a potential risk of getting infected and losing our job again after resuming work.
As the COVID-19 task force loosens restrictions on indoor dining and expands access to vaccines, restaurant employees and wait staff, as well as chefs, are also getting vaccinated.
Making thousands of dishes per week is a huge responsibility, especially amid the health crisis. The vaccination campaign guarantees our safety and offers the best health conditions for clients.
Tunisian authorities have made significant steps to revive tourism while respecting a strict health protocol. More than 3,500 tourists are currently staying in Tunisian hotels, compared to over 200,000 during the same period in 2019. According to the National Institute of Statistics, tourism revenues decreased by 55% in the first 4 months of 2021 compared to the same period in 2020. As a vital economic sector, this industry is expected to see a significant boost due to the progress in vaccination campaigns in most countries. Adnan Chouachi, CGTN, Tunis.
Algeria expects cereal output for 2020 to fall by anywhere between 35 to 40% from last year's 5 million tons due to drought. The country has in recent years harvested the bulk of what it needs for durum wheat and barley, while depending on imports for soft wheat, in large parts getting that from France. Movement restrictions linked to the global pandemic, however, contributed to production falling pretty much across the country, and that forced farmers to revise their expectations much lower. Now, output, in turn, means that the government will continue to turn to international markets to supply its 45 million people. Algeria spends roughly $1.3 billion every year on cereal imports, and wheat, which is considered to be a strategic crop, is subsidized.
The situation is worsening because for 15 years, Algeria has experienced a specific state of drought due to the delay in the arrival of seasonal rains. 99% of cereals in Algeria depend on rainwater and are not irrigated. I think there is an urgent need to find quick alternatives, like relying on supplemental irrigation to deal with the drought situation.
Nigeria's government says it's in discussions with Twitter after it suspended the US social media giant services in the country. Foreign Minister Geoffrey Onyema said after a meeting with diplomats that the government wants to resolve the row with the tech giant that has close to 40 million users. in the country. Here's Alexandria Majala with the details.
Nigeria says it's in discussions with Twitter after it suspended the U.S. social media giant's services in the country, branding its users unpatriotic. The Twitter suspension has provoked an outcry from the international community and rights groups who denounced it as a threat to freedom of expression in Africa's most populous country.
We recognize that there are issues of responsible use of social media, but we remain firm in our position that free access to the ability to express oneself is actually very important.
We believe in human rights and freedom of speech, but all that also has to be used where freedom of speech is concerned responsibly, and where that is not the case, the government obviously has to take measures.
Nigeria said it was halting the platform's operations indefinitely on Friday, 2 days after Twitter deleted a comment from President Muhammadu Buhari's account referring to civil unrest that the firm said violated its rules. The presidency denied that the suspension was a response to the removal of that post.
Why we've taken this measure is to see to what extent we can rebalance these media as forces of good and stop them being used as platforms for destabilization.
According to NOI polls, a public opinion and research organizations, more than 39 million Nigerians have a Twitter account. The platform has played an important role in public discourse in Nigeria, with hashtags Bring Back Our Girls after Boko Haram kidnapped 276 schoolgirls in 2014 and End SARS during the anti-police brutality protests last year. Some Nigerian broadcasters are concerned the clampdown on Twitter is part of a more general crackdown against the media. Alexandria Majala for CGTN.
You're watching Global Business Africa. Time for a short break. Here's what's coming up next. A major outage linked to a US-based cloud services provider brings down global social media and news websites. And Apple has held its biggest conference of the year for developers. We'll be checking into WWDC shortly.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Welcome back to the program. Let's run through some of the stories making your headlines at this hour. A delegation from the West African regional body ECOWAS is in Mali for mediation talks. It's being led by the former Nigerian president, Goodluck Jonathan. It also includes Ghana's foreign affairs minister. Just last week, the African Union and West African leaders suspended Mali from both organizations after the interim president and prime minister were ousted in a second coup in 9 months. On Monday, the coup leader, Colonel Assimi Goïta, was then sworn in as interim president despite international condemnation. Burkina Faso continues to deal with the aftermath of a militant attack in which left at least 132 people dead. On Friday evening, militants attacked the village of Solhan, shooting at civilians, burning homes and the local market. The country's prime minister has visited the area to inspect the devastation. And the United States has imposed visa restrictions on Cameroon separatists who are believed to be undermining peace efforts in the West African country. According to the Secretary of State, Antony Blinken, the U.S. is concerned by the continued insecurity in Cameroon. It's urging both sides to negotiate and work for peace. Cameroon's two western Anglophone regions have been gripped by fighting since 2017. Separatists there have been trying to break away from the predominantly Francophone government. That's the run through your headlines. All right then, on to a story that in one way or another we're all affected by it. Today, several websites are back online after a major outage linked to a US-based cloud services provider. A number of government, media, news sites all stopped working this morning, including Reddit, the New York Times, the official website of the British government. They're all offline for some time. Affected websites earlier displayed error messages and pointed to issues with Fastly. If it's a company you haven't heard of, I don't blame you. The company says it's looking into its global content delivery network. Now, Fastly helps websites move content using less congested routes in order to reach consumers a lot faster. A senior executive at Samsung says that the South Korean tech company is banking on Europe to maintain growth momentum in its network equipment business. Even though Samsung is the world's biggest chip and smartphone maker, it ranks 5th behind Huawei, Ericsson, Nokia. There's a company I haven't heard of in a while, isn't there? And ZTE in 5G network equipment. Now, according to the market research firm Del Oro Group, the company had a 10 to 15% market share in the first quarter of 2021. Samsung is currently conducting 5G trials with European telecom companies like Deutsche Telekom in the Czech Republic and Play Communications in Poland. Besides Europe, Samsung is also looking to expand markets in India, Australia and Southeast Asia. In the meantime, cryptocurrency prices had quite the sell-off today, with Bitcoin down over 10% at one point, under $31,000. Other digital currencies, including Ethereum and Dogecoin, they also plunged in the last 24 hours. Now, it's not 100% clear exactly what's driving this latest downturn, but some analysts say it might be related to concerns over scrutiny on cryptos after US officials managed to recover most of the ransom paid to hackers that targeted Colonial Pipeline. Bitcoin outflows hit $141 million in the week ending on the 4th of June. That represents roughly 8.3% of net inflows seen so far this year. For the year so far, the token still showed inflows of $4.2 billion. That's according to data from the digital currency manager CoinShare, which was released on Monday. The data also shows that the cryptocurrency sector overall had outflows of over $94 million just last week. China's Foreign Minister Wang Yi and diplomats from ASEAN are meeting in the southwestern Chinese city of Chongqing. As Feng Yilei now explores, they commemorated the 30th anniversary of the establishment of dialogue relations at a special ministers' meeting on the 7th of June.
As an old Chinese saying goes, a man is steadfast at the age of 30. This also applies to China-ASEAN relations, which has weathered ups and downs since dialogue was initiated in 1991. But now both sides say that relations have grown into a successful and dynamic example of cooperation in the Asia-Pacific region. Some say the partnership is crisis-driven.
That means when both sides are facing a common crisis, their ties get stronger, especially when some big countries tend to sit on the sidelines or even take advantage of that, just as in the 1998 Southeast Asian financial crisis.
China and ASEAN have stood firm through difficult times. Two financial storms, the Indian Ocean tsunami, the SARS pandemic, and now COVID-19. China's most recent support involves shipments of Chinese COVID vaccines to nearly every nation in Southeast Asia. But to achieve a full recovery, challenges still remain. China has pledged more vaccine supplies and more contributions to the COVID-19 ASEAN Response Fund. And both sides will push ahead with collaboration in vaccine development and reserve of medical supplies. Joint efforts are paying off in other areas as well, with trade and investment seeing a rise against all odds. In the first 5 months of this year, ASEAN was China's largest trading partner, surpassing the EU, the United States and Japan. China's total trade with ASEAN reached over 2 trillion yuan, around $300 billion, up by nearly 30%. The increase in trade is also thanks to China and ASEAN's continued commitment to open up. Both have been upgrading the China-ASEAN Free Trade Agreement, or CAFTA, the largest free trade area among developing economies. And as more ASEAN member states ratify RCEP, another free trade agreement between Asia-Pacific nations, they are expected to be one step closer to a new level of economic and trade relations.
Amid the pandemic, investment has increased against the trend. In particular, the growth of China's investment in ASEAN countries is considerable. That means entrepreneurs are very optimistic about more opportunities after the implementation of RCEP. And these opportunities are clearly at odds with the so-called decoupling threat.
The question is, will the momentum last? China and ASEAN are planning for the long run. With 2021 marking the year of sustainable development, both are seeking cooperation in new areas, namely environmental protection, new infrastructure, disaster management, and more. Foreign ministers at the summit have agreed to form a cooperative action plan on the digital economy as well as a data security initiative. While each country's relationship with China is unique, some things have remained unchanged between China and ASEAN for the past 30 years.
It is our hope that we can gather together to earnestly sum up some of the journey we have traveled and continue to pursue this successful idea that has brought us here today. That is to prioritize development, focus on cooperation, properly handle differences.
China and ASEAN have established dialogue mechanism at all levels to ensure a general direction of friendly cooperation. Officials at meeting have agreed to resume negotiations on the Code of Conduct for the South China Sea. That shows peace and stability in the waterway serve the long-term interests of both sides.
ASEAN diplomats often compare ASEAN to a big lawn, and China and the US are two elephants. If elephants fight on the lawn will be damaged. So obviously, ASEAN does not want China and the US to play a big game in the region. And I personally don't think ASEAN is going to take sides because that won't serve their own interests.
The common interests of ASEAN and China are peaceful development and regional prosperity, and they cannot be achieved without stability and close neighborly ties. Chinese Foreign Minister Wang Yi has called to consider lifting China-ASEAN ties to a comprehensive strategic partnership. And China and ASEAN have agreed to build an even closer community with a shared future to achieve another 30 years of even greater cooperation. Feng Yilei, CGTN, Chongqing.
Now, Spain on Monday ended restrictions on travellers from outside the European Union and the Schengen travel zones. People can now enter the country as long as they have a certificate to prove that they have completed the vaccination procedure 14 days before they travel. This comes in the wake of the country's earlier decision to lift restrictions on travellers from the United Kingdom and China in an attempt to boost Spain's tourism sector. Here's Rahul Pathak with that story.
If they vaccinate, they can come. That's the message from Spain to travellers from almost everywhere. From Monday, anyone who has been vaccinated or taken a COVID antigen test will be allowed into the country. The only exception, those coming from India, Brazil and South Africa. Spain hoping the more relaxed rules will lead to an increase in tourism, an industry that has lost more than 80% of its trade in Spain last year alone.
Everything with the vaccinations went well. I think it's obviously something that would help the economy for more people to be coming here. Once people are vaccinated, I think that at least in Texas, our rates have gone down really well, and so people are feeling more confident, and I would feel confident that it's a good move.
I mean, if they've been vaccinated, I think it's fine, and as long as they have proof and they show it, yeah.
Spain says it expects to get back at least 40% of its pre-COVID tourism levels by the end of 2021. The nation's health minister saying the country was in the process of reclaiming its global leadership in tourism. Pre-pandemic, UK travellers spent over $11 billion in Spain. The absence of British tourists coming here in large numbers means Spain could now concentrate on attracting other countries.
The two important markets right now are the United States and, for example, in Asia, there's China, which is one of the most important markets in that part of the world. The objective is to slowly work to see if we can return Spain back up to the top of the list and, above all, return confidence to travellers from those markets.
Another boost to the travel sector will be the introduction of the EU COVID digital certificate, due to come into force on July 1st. Meanwhile, Spain will be hoping for better news from the UK by the end of this month when it releases the next update on safe countries to travel to. Rahul Pathak, CGTN, Madrid.
Apple has held its biggest conference of the year for developers. It's Worldwide Developers Conference, or WWDC if you speak the lingo. The Silicon Valley tech giant unveiled a host of new features for its iOS 15 update and its new Mac operating system, codenamed Monterey. Mark New has the details on what's hot.
It's an event that typically draws in thousands of developers, but this year the audience watching CEO Tim Cook on stage looked a little different.
Good morning and welcome to WWDC. It's wonderful to see so many familiar faces with us today.
Despite some analysts predicting the release of new laptops, there were no new gadgets unveiled. Instead, it was all about software, and that includes privacy.
We believe privacy is a fundamental human right. We don't think you should have to make a trade-off between great features and privacy. We believe you deserve both.
Apple's new mail privacy protection will prevent senders from being able to see your location or know if you've opened the message or not. They've also created something called Hide My Email.
We've all had moments when we've thought twice about sharing our personal email address, like when we're filling out a form on the web. With Hide My Email, you can share a unique, random address that forwards messages to your personal inbox.
Apple's Safari browser will also hide the IP address from trackers, so marketers can't use it to link a user's activity across different sites.
If you really think about what they announced in the way they are adding levels of encryption to every aspect of Safari and Mail, they fundamentally created a VPN inside apps. This will make both Safari itself almost impossible for someone to see what is being searched or watched, etc.
Apple also took on one of the biggest concerns about personal assistants like Siri. Your recordings being listened to for the sake of improving the technology. Apple unveiled on-device speech recognition, which by default processes the audio on your phone so it never leaves your device. Apple also introduced FaceTime links, which can be sent cross-platform to non-Apple devices to join FaceTime calls.
Let me fix this.
Voice isolation cuts out background sound, and spatial audio even directs someone's voice to their position on the screen.
The new user interface makes it look like you are actually in the same room when you're in the portrait mode. They added spatial audio. But again, FaceTime is still maxed out at just 32 users, whereas Zoom and all these others can go up to 100 users, in some cases more than that.
Apple also unveiled a number of features that will allow users to cut down on the number of items they carry. The iPhone's Wallet app will soon store driver's licenses and serve as virtual keys for either starting your car or entering your home. Mark New, CGTN, San Francisco.
Quick run through commodity prices. We'll focus on oil at this point. Brent and WTI, they just continue the meteoric rise so far in the year. It seems that the trend is suggesting that Iranian crude won't be back in a big way in the market anytime soon. Effectively, it won't upset the supply situation. With today's gains of about 0.5 and 0.7% respectively, the two benchmark contracts have gone up by around 40 and 41% in barely 6 months. Talks between Iran and the counterparties in the JCPOA are due to resume this week, but don't hold your breath for a deal. Here's what's coming up next. We'll be in Egypt next. It's set to become the first Middle Eastern and North African country to manufacture laptops and tablets. And stories coming up shortly. When you look at Africa, what do you really see? Do you see fast-growing, endless deserts and parched earth? Or do you see the biggest opportunity for an agricultural revolution in a generation? Do you see crowded, unplanned cities or vast, untapped markets? Do you see a population at risk, or do you see a billion-strong opportunity to grow the next wave of multi-billion-dollar firms in Africa? When you look at Africa, what do you really see? Join us in Global Business and see Africa through our eyes. Welcome Welcome back to the programme. One last story for you in this particular hour. This one's from Egypt. It's set to become the first Middle Eastern and North African country to manufacture laptops and tablets at scale. That move follows the launch of a new production line that will enable the introduction of Arab-made tablets and laptops in the market in the third quarter of this year, following a surge in demand that has accelerated given the outbreak of the COVID-19 pandemic. CGTN's Yasser Kim has that story from Cairo.
Official statistics show that internet users in Egypt have nearly doubled to 63 million in 2020 compared to 2019, while e-commerce has jumped by 300% in the same period. This increase has been fueled by the outbreak of the coronavirus pandemic in March 2020. The surge in demand for laptops and tablets prompted a partnership between the state-owned Arab Organization for Industrialization and Jordan's TAG Global to produce the first Middle East and North African brand.
There has been a growing demand for laptops and tablets for personal and business use. We felt we have a duty to localize this industry instead of only importing. We installed 2 of the highest developed production lines for laptops and tablets and are tested in the most extreme conditions to ensure quality and durability. In the beginning, we plan to produce 300,000 units a year and have the capacity to increase this number if the market demands more. We have also made plans to export to African countries in the near future.
The price of the laptop and tablets is expected to be 25% less than competing products in the market. 2 new segments of the population have raised online activity since the COVID-19 pandemic struck. Employees of companies and institutions that continue work from home, and millions of students as the Egyptian educational system has been transformed into online studies. The Egyptian brand caters to such segments.
Companies in my line of work are all transferring their work online, so all our work is on laptops and tablets. The market is opening up. I hope the Egyptian brand can compete with international names. We will support the Egyptian product even if it struggles at the beginning, but we'll encourage it until it succeeds.
We received the tablets after paying the import costs, tariff costs, taxes and transport costs. But when they are produced here, we will save all these costs and it becomes cheaper for us as students. Secondly, it creates jobs and adds value to the economy.
The TAG Blue 2, a temporary brand name for the laptop and tablet, is a mix of local and Chinese components.
It is not just assembling a product. We have the best lines to produce the main board. We produce it now and we'll add other locally produced components as we go on. Of course, we are working with China because most international companies use the electronic components from China. We are doing the same with the big Chinese companies that provide us with high-quality electronic components.
To ensure access to consumers, 100 sales and service centers are being set up countrywide, as well as deals with distribution companies. The Egyptian laptops and tablets should be in the market during the third quarter of 2021. Yes, Hakim for CGTN, Cairo.
A quick run through the currencies. Not much movement as far as the African fiat currencies are concerned, but the second quarter has been absolutely dismal for the crypto world, particularly for Bitcoin. The cryptocurrency has fallen from over $64,000 to today's levels around $31,200. It has recovered a little bit, around $32,000 as we speak at the moment. The US has had a lot more talk about the need for regulation today. The IRS commissioner has been telling legislators that the agency needs more power to regulate the sector, impose reporting requirements. Ethereum also not spared in today's rout, down over 10% at one point, going as low as $2,309. That's it for this edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen here in the last hour. There are many ways to get your feedback back to us, all of them on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next.